But David, can we move on to Kellogg? It's a good segue to Kellogg.
I think that's a fantastic.
I think that works. Snacking to snacking. Kellogg shrinking
hold
to
it.
grow.
You're just trying to work in Tony the Tiger. Remember the two of them, what? One's in the tank and one's in the
one's
box.
on the cereal box,
right?
Yes, got a tiger
You just
in
will
your
do
tank.
anything to work in the dock.
I did not have anything to do with the dock. Kellogg is separating to three companies. CEO joined us on CNBC earlier.
I thought he was very good. Do we have any tape?
Squawk Box.
No.
Let me give you some numbers before we get to listen to him and explain it. Snacking, global snacking, revenues $11.4 billion, estimated EBITDA $2 billion, roughly 60% global snacks. Pringles, Cheez-Its, Pop-Tarts. I still pass that newsstand by the subway, and I'll still pick up a pack of Pop-Tarts.
That's just right to Planet Fitness.
Rice Krispie Treats, Nutri-Grain. Lots of really great stuff. Very good for you.
Yeah. Pringles, remember, was
noodles. Eggos.
Eggos,
yeah. Yeah. And then North American Cereal is going to become its own company. $2.4 billion in revenues, about $250 million in EBITDA. Obviously not really growing very quickly. And then they're going to have a plant-based company as well. Plantco. Doesn't have an EBITDA, but it's got a decent amount of revenue.
Well, I mean, the
Morningstar Farms.
So, David, people are going to say
pure-play plant-based foods.
Will that be an acquirer, or can that be acquired?
Right.
And if
that's a
great
question.
How long?
Yep.
Because that people want plant-based.
Yes.
And that may bulk up a plant-based company.
It may very well.
And the snack company can buy it.
The timing now, I mean, I don't know
because they're
why.
fed up. They had a really good quarter.
Yeah.
The stock was up 5% for the year. David, many managers, they're fed up with the bear market, and they're taking matters into their own hands.
Well, let's listen to the CEO explain again why now is the right time for this split.
Right now is, I think, the opportune time to do this. We are coming from a position of real strength and great momentum. We have completely turned the business around from a top line and a bottom line perspective. And we see the next step in unlocking our full potential in unleashing three new companies.
All right, they're unleashing three new companies. By the way, it's going to take a while for them to be unleashed. 18 months.
Well, that's
these spins. I mean, we've got J&J, GE. We can still sit here a year from now talking about these things.
Well,
they take forever.
Okay, so David, why is that? Explain to people why they take so long.
You've got to set up capital structures for all of them. Typically, you need shareholder votes. You need regulatory reviews. You just need a lot of different things. Regulatory being the least of it, but really. The capital structure, the management, it just takes a long time.
Management, by the way, took that strike and got a good contract for the workers back in 2021.
Right.
Now, David, here's what I don't get. Why would you ever want a plant-based company that doesn't really have, it's almost like SPAC-like?
Small and losing money.
Right. So it's just like, I want the good part of Kellogg, the part that's
because you're going to have there's going to be a certain segment that appeals to. Your ESG focused funds, perhaps, will find that as a name that they can invest in.
That's where I was going. By the way,
claim a little green
because I remember we're all.
And by the way, it isn't a growing market. You do know that.
Yeah, but this is part of the ESG craze. And, people are desperate to find pure ESG, and Kellogg is creating it. And I think if you're PepsiCo, you might say, you know what, this bulks up my ESG and makes me maybe puts me in a higher part of the pantheon of ESG. Yep. Remember, Goldman's under fire for what's really ESG. You got Scope 1, Scope 2. We should be staying on this story,
yes,
David, because eventually either we're going to find that ESG is going to be regulated by the government, or they want visibility, or it's phony.
Well, I think it's a little both.
You do?
Yeah, I think it's real in some ways, and I also think it's a marketing opportunity for a lot of these funds, and it's nonsense. Yeah.
Wow.
Both.
Wow. Okay.
Having watched it and tried to really understand exactly what's going on.
No, do you think that the really bad...
I know that doesn't help.
How about
which part is real,
how about
which
Krispy
part is
Kreme
nonsense?
merging with the snack? Why? Why not?
If you start your day with Pringles, Cheez-Its, Pop-Tarts, and Rice Krispie Treats, I think you're in good shape.
We had a lot of cheese balls this weekend.
Did you?
Yeah. And we always felt that it was...
A lot of cheese balls?
Yeah, we just thought it was really good for us.
It's delicious. By the way, this is reminiscent, and I think it worked. Remember when Kraft split up? Well, obviously the Kraft part hasn't done that well, but the Mondelez part's done very well.
The best...
Remember, they were all together,
the best
one company.
Split up was...
They bought Cadbury.
Philip Morris.
Right? when it owned Kraft.
Yeah, it owned Kraft. David, tell me that when you were poor like I was, you were growing up, you got those little slices, and your mom didn't buy the ones that had plastic in between them. Those were too expensive.
Yes.
As she, by the way, watered down the Welches and talked about the Welch family as being somehow like bad.
Listen, for me,
and
I've
then
told
David,
you many times what
David,
I grew
when
up
the sales weren't there,
yeah,
Tang.
Which
was good because it was astronauts.
For me, it was Hawaiian Punch. Convinced it stunted my growth.